Some people recommend dividend payers, and others recommend small caps and emerging markets. It's up for debate since it isn't totally clear, but what is almost universally true is that you do not want to own bonds. Conventional wisdom says that owning established, dividend-paying companies with large amounts of free cash flow is good during times of inflation. However, with surging inflation, it's only a matter of time before the Federal Reserve increases interest rates. And when interest rates increase in a meaningful way, the most recent 10 occurrences of this since 1960 reveals that 7 out of 10 times dividend-paying companies outperform the market. During these periods where dividend payers did outperform, interest rates were raised slowly, and the 3 out of 10 times when dividend payers underperformed was when interest rates were increased rapidly. So, by choosing dividend payers to try to outperform the market, you might just be placing a bet that Jerome Powell plans to increase interest rates slowly. And predicting Jerome Powell's behavior is a bit of a fool's errand, but if you want to play that game, be my guest. As I mentioned earlier in the video, if there's one thing that is always true, is that owning bonds during times of inflation and increasing interest rates is terrible. And if you've watched my previous content, you know that I hate bonds, but even setting my bias aside, math shows that values of bonds goes down immensely when there's high inflation. So what about those small caps? Well, in my opinion, small caps present an enormous opportunity. Small cap companies' forward PEs are trading below their historic average. Meanwhile, the S&P 500, which is large cap companies, have forward PEs at or near all-time highs. You've got to go all the way back to 2000 with the tech bubble before you see forward PEs as high as they are right now. This is why I believe there's opportunity with these small cap companies. Now, the question becomes, should you buy a handful of individual small cap companies or just buy a small cap ETF? I'm not a financial advisor, so you'll have to make that decision for yourself. But for me personally, I'm choosing to put my money into a handful of my highest conviction small cap companies. To me, the risk reward with doing this is well worth it, and in my opinion, I'll be able to generate significant market outperformance over the next 2 to 5 years. If you're an index fund investor and all you own is the S&P 500 or a total stock market index, you might be wondering if you need to sell out because large caps are overvalued or if you need to make some moves. And the answer to this is no, you don't have to do that. News headlines will try to scare you out of these positions, but stocks in general, including large caps, do well during inflationary times. They've always produced market-beating performance above and beyond inflation, so you don't have to worry if you have your money in the S&P 500 or other large cap companies. Just because some people say that we're due for a correction or a crash doesn't mean it's going to happen. We've never seen the federal government and Federal Reserve backstop the economy and the stock market like they have over the last couple years, and there's really no guarantee that there's going to be a crash. In my opinion, the greater risk is getting out of the market and not being there in case things continue to go as they have been so far. So here's the bottom line. Don't own bonds. If you want to choose between dividend payers and small caps, you are free to do so. And if you're an index fund investor holding the S&P 500, don't be scared out of your position. Stocks in general do well during times of inflation. With that said, if you've made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.